Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, April 5th. It is 5:10 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. State of the market, we're in a short-term pullback that sure looked a lot worse yesterday than it did after today's bounce back. We'll dig into it when we get to the charts. But at a high level, check the trend gauge over here. We downgraded leadership to neutral yesterday, put the green sub arrow back on as very nice bounce back by quite a few names. There are some that are broken and need bases, but there are some new leaders emerging and they showed strength today. And that's certainly a good sign. And as far as the three time frames that we track the trend on over the five major indexes, the S&P 500 and the mid cap index regained the 21-day moving average today. So we're keeping that on neutral with the Qs closing right below the 21-day moving average. We've got the green sub arrow out there also. And we had two indexes close below the 50-day moving average yesterday. They reclaimed it. So we've got the clear green arrow there. And all five of the major indexes well above their long-term 200-day moving average. So what happened today? I gave this result maybe about a 10% chance yesterday after seeing uh, the, um, the heavy selling yesterday. The price numbers on today's close are very impressive. Volume much lighter than yesterday. That's not really a surprise, as there was a lot of pent up bearishness maybe that contributed to people all heading for the exits at once, and volume was heavy yesterday. Price action nice today, volume not there. But like I said, I figured maybe a 10% chance that we'd see this, and we did see it. Market has surprised me so many times I can't even count. But the action is the action. And while we closed yesterday, certainly looking for more downside, we didn't get that at all today. We take it on a case by case basis. We've got rules for where the indexes are and where the individual names are that we own, and that dictates our exposure. And we don't argue with those rules. We'll get into them as the video progresses, but here are the final numbers. Big Seven, nice day today, up 2.16%. Remember, our Big Seven does not include Tesla, as that is a broken stock. We've got Netflix as our seventh entry into the Big Seven there. RG8, our 8 growth ETF composite. We created this in 2021 as a better way to keep our finger on the pulse of what's going on broadly in growth land, up 1.03%, decent bounce back. S&P 500 opened up 0.2%, put in the low within the first couple of minutes, and impressive bounce back. I'll talk about some key levels that were regained, one level that couldn't get back above, and what these levels mean going into next week. But up 1.11%, very nice. Equal weighted S&P 500, half of that, which means no surprise, the Big Seven pumped this number up. Don't like seeing this lack of breadth there. And it actually made me think that we might see worse numbers on mid and small cap, which we'll get to in a second, but we didn't. NASDAQ 100 up 1.18%, equal weight up 1%, Dow up 0.8, S&P mid cap up 0.83, Russell 2000 small cap up 0.47, Global 60/40 up 0.3, and this is all stocks, bonds, yields bounce today on the jobs report this morning. But it didn't hold back stocks, and we've got a theory for that as well when we get to the tail of the tape. So global 60/40 stock and bond up 1/3%. In-house GROTECTION, nice bounce back, up 0.87%. And I got to tell you, it's just the exposure rules. Seeing the way things were selling off yesterday, if the exposure rules that we've put together over the years, that's what kept me from selling more things, more names, going lighter. You need follow through for any trend. And we got no follow through to the downside today. We got a bounce back. That doesn't mean we won't get follow through to the downside next week, but we're ready for it if we do. We also, on the other hand, might get follow through back to the upside, and we'll be prepared for that as well and increase exposure as long as healthy risk reward entries present themselves. Let's get to we'll start off with the S&P 500 here, and let's bring up the 30-minute chart. And right now, be able to draw some lines here. So here's the FOMC breakout, that 51.74 to 51.90 pivot. This is just looking like a shakeout below that based on yesterday's action now. Now, that doesn't mean we can't break it again next week, but basically 51.74 to 51.90 was the range. We undercut it, got back above it, pulled back intraday, but held it and then had a decent close. So back inside this range with a 1 day false breakdown. Now, as far as other key levels go, uh, if you draw a Fibonacci set from the high to the low, I know fundamentalists are just laughing at that, but these fib sets work more times than they don't. If you draw a fib set, a 50% retracement was right at 5201, a 61 point set point 8 retrace was at 5214. You look at a 5-minute chart. Let's look at a 5-minute chart. We spent a lot of time right around that 5215 level today. Tried to break above it, couldn't. The sell-off reclaimed, didn't get back above the 61.8, but we're above the 50. And anytime you can reclaim half of a big sell-off, you're in good shape, and that's what we did and closed back above the 5200 level. So key levels, healthy back above today's highs or the 61 fib retrace of yesterday's range. And we'll pay attention to all these levels next week. Today's high, 5222. 5214 is that 61.8 area. 5201 is the 50% retracement area. And then we've got back to that 5147 to 5190 level. That, like I said, it's just looking like a shakeout below it and a reclaim above it today. You see how we tested it when we came back twice today on both of these 30-minute candles, and it held. That's a good sign to me. And then we bounced into the close off that. So uh, back to this 5174 to 5190 level to the downside. We want that to hold on any pullback, but for now, it's just looking like a false breakdown on the consolidation. But volume was very much on the light side compared to yesterday's. That's not a surprise, as panic selling did look like it kicked in, and we see what next week brings us. So there's the S&P 500. NASDAQ 100 closed just a touch below the 50-day moving average today, back above it, closed just a touch below the 21-day moving average today. So a nice bounce there, also up 1.18%. Dow closed below the 50 yesterday, got back above it, still below the declining 21-day moving average, but a decent bounce there. We're not going to dig into the numbers there the way we do on the S&P, as we really do focus on the S&P. Why? Because all rotation takes place within the S&P, from growth to value and intra-sector. Uh, that's what you that's how you can very easily tell the difference between money heading for the exits and just sector rotation. And sector rotation is very important. Ralph Acampora years ago said it's the lifeblood of a bull market. I believe in that wholeheartedly. Here's mid caps bouncing at the 21-day moving average, very nice, and small caps not as nice. Bounced, couldn't get back above the 21-day moving average. Let's go to the VIX. VIX was positive most of the day while we were bouncing. It gave it back as the day went along, down 1.96%. We're above that 16 level. We're above all the moving averages. So an inside day for VIX, same way we had an inside day on the indexes, no surprise there. Dollar started out, the jobs report, well, I'll get to that in a second, but the dollar started out strong and faded as the day went along. And so now on the dollar, we got to the top of the range and we're pulling back into that level. But the dollar, if we're talking about the dollar, we're going to talk about precious metals. Nice bounce back here today. Very strong. Silver up 2.2%. Gold up 1.71%. Look at the GDX up 3.23%. Anything that's above yesterday's high from a traditional stock standpoint is signaling strength, and you're seeing that in the gold and gold stock complex, gold, silver, and gold and silver stock complex. Bitcoin pulled back today. I got to stop showing BITO and showing IBIT. Pulled back today, still above the 21-day moving average, which is still trending higher. Now on to bonds. The employment report, the headline number that came out was very strong. That spiked yields. Yields up means prices down. And initially the market sold off, but like I said, and like we just showed, got stronger as the day went along, a few pullbacks along the way, but all in all, a good day for stocks. As far as bonds go, pulling back toward the bottom of the range on prices. That's the broad bond index, TLT, the long bond index. Now let's go to yields. We're back above this breakout level here. So we pulled back below it yesterday, and that was really on a flight to quality, a safety trade with the market selling off. Money very often flows into bonds and pushes prices up and yields down. Recovery today on yields on the employment report, TNX, back above, bad line draw, back above the range as well. All right, so that's all the interasset correlation. Let's get to the tail of the tape, and we can talk about something we talked about and Dan brought up on the podcast today, and that's this in the news. NFP 303 versus 200K. That was the headline number. Very strong report, but all of them were part-time jobs. In fact, full-time jobs we actually lost. Maybe the market was smart enough to look under the hood and see that this is technically a weak employment report. If you see what's actually going on here, plus the unemployment rate fell. And perhaps that's why, although the rate cut odds appeared to drop initially, I didn't see the final numbers today, but this may be what's responsible for the strength in the overall market, as the market does desperately want the Fed to cut rates. So as far as bull and bear cases go, back above the 21 on the S&P, not quite yet on the NASDAQ 100. Day count from down one to up one. We're right on the 8-day exponential moving average on the S&P. First day back above the 21 on the S&P after that long streak. As far as individual sectors go, yesterday 11 out of 11 were down. Today 11 out of 11 were up. A lot of people are going to argue it's just short covering. Volume was light. Well, we'll see, and we'll take it on an individual name by name basis. But anything that makes a higher high above yesterday's high in an individual name is certainly something that needs to be paid attention to. Builders bounced despite interest rates increasing. And as I mentioned, gold and silver stocks on the downside. Bitcoin and solar's the only weakness. As far as the portfolio went, as I mentioned yesterday, our initial inkling was to trim some things into resistance, and we did trim small part of our recent ad in the video, which was slightly underwater. So we took a little bit of that off, and we also trimmed some CrowdStrike as it failed also into moving averages. We'll look at those charts in a minute. And with the strength back above the 21 on the S&P 500, we reduced our SPXS hedge to get our beta back to 1.1. We're above the 21. Our rules say we need to have 0.6 beta in the S&P 500 via leveraged ETFs, and we need to be above a 1 broadly on the rest of the indexes, because if not, we're arguing with the overall market strength. And I know leaders have been the early leaders have been lagging, but they've been replaced with things that are investable, such as commodities, and some other emerging leaders. So just sticking by the rules for what our exposure needed to be, and it paid off today with a decent bounce back in the portfolio. So the bottom line, bullish bounce back on lighter volume. S&P and midcaps regain the 21-day EMA. I laid out the key levels on the S&P 500. We'll see what next week brings. Let's take a look at some individual charts now, and we'll start with what we traded. NVIDIA bounced into this declining, well, it's really flat, the 21-day moving average, and failed. We took our latest ad, which is slightly underwater, half of that back off, and then CrowdStrike, CRWD, ran into the 50-day moving average and paused there. We booked a 76% profit on, we bought that the exact day of the breakout down here, the exact day of the follow through day on November. So it's been a very nice run for that. We're down to just a small placeholder position on that, see if it can form a base and break back out to the upside. Let's go through the rest of the portfolio and rate the action on these, and we'll go in order of how big our positions are. Micron, lower volume today. Nice consolidation above the 8-day moving average. Give this one an A. Bava pulled back yesterday, broke below the 21, got right into the 21 today. Lower volume is a bit of a detractor. We'll give this one a B minus. Uber, after hours, Tesla is saying that they're going to debut their robo-taxi. Tesla was down today because of a supposedly false report about them scrapping their Model 2, but apparently they're just refocusing the Model 2 into robo-taxis. Tesla's up after hours on that, but it's hitting Uber down 2%, as you can see here. Uber, a nice bounce on above average volume, right back into the 21-day moving average. We'll give this one a B minus as well. Eli Lilly, hanging right around the 21. We'll give this a B plus. FCX, very strong. We trimmed some yesterday. That 50 half Livermore level is acting as resistance for now. This is an A stock. CrowdStrike, we already reviewed, and Dell. A great bounce back on Dell. This is an A as well. This is one of the new emerging leaders that just since bouncing off the 21-day here has shown incredible relative strength. So good stuff there for those names. What else jumped out today? Let's take a look at a few. Spotify, very strong, third day up in a row. This is an A stock and one of the leaders, and any weakness, look at the volume as well. Any weakness, maybe a 60-minute stochastic pullback to oversold and then bounce back up may offer a starter entry, but this is one we've definitely got our eye on. Dexcom, we got stopped on this yesterday, but a very nice bounce back on that today. And VRT, one of the big data center leaders, regaining most of the loss of yesterday, not back above the high, but good bounce back and back above the 8-day exponential moving average. So all in all, a surprisingly strong bounce. Yes, volume lighter on not only individual stocks, but also on the indexes, but one day back, but one day when you get a change like that, you look for follow through, and we hit the downside. When I say change, I'm talking about the weak action on Thursday. You look for follow through the downside, and it just wasn't there. Doesn't mean it won't be there next week, but we'll be ready to deal with anything that comes because we're different from other advisors. We bend like a tree in the breeze. Our goal is to make sure that people do not lose their nest egg in nasty bear markets. Now, there's a big difference between a pullback and a nasty bear market. We've developed over the years different levels of participation in the market to make sure that you don't get hit upside the head with the 2008 2x4. Here's how we're different very clearly. Direct access to us, active risk management, technical analysis of the markets, focusing on leading stocks, avoiding lagging sectors, nightly videos explaining what we do, quantified downside risk. You don't get anything other than a pie chart allocation and a pep talk from traditional pie chart advisors. As William O'Neill said, anyone can get you in. Who's going to get you out? Doesn't mean that we sell everything when things go bad. Like I said, we've got those levels that keep us involved in the market and rules for all of our individual holdings. And if you're interested in this approach, we'd love to hear from you. You can email me, don@revereasset.com. Hey, guess what? I'll be on IBD Live May 17th, Friday, May 17th. making my debut there. And this is, I can't tell you how much this means to me. I mean, I started down this path many years ago, going to their seminars, learning from some really intelligent, great people. The knowledge that they impart is amazing, and I wouldn't be sitting in this chair right now doing these videos if it wasn't for William O'Neill and his legacy. So that's something that I'm extremely proud of. But you can email me if you're interested or have questions. Don at revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. If you're interested in becoming a client, my partner Dan Stewart is at Dan at revereasset.com. Flagship portfolio named GROTECTION. Dual mandate, growing assets in uptrending markets, protecting them in risky downtrending markets where we can tell the difference here. And we preach that message every night on these videos and on our weekend podcast. And make sure you check out our weekend podcast. It's out there. It's out there and available now on YouTube. And with that, I'll wrap up the video for the week ending Friday, April 5th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great weekend.